Hello, today is June 15th, 2024, and I just wanted to make another quick video about dollar cost averaging. It's something that's very important for every investor or even day trader to learn. As you know, dollar cost averaging is in the Intelligent Investor, written by Benjamin Graham. It's very important that you understand that dollar cost averaging is one of the best ways to consistently invest and beat the market. Basically, what dollar cost averaging is putting the same amount every week of, say, your paycheck into a stock like NVDA or Eli Lilly. Basically, you need a stock that's consistently beating the market and has a moat. Plus, it's an extremely good habit to get into, and pay yourself first is always the best formula for long-term success. Also, if you day trade like I do, I bought Coinbase at $246.20 a share, and the price actually fell a little bit Friday, so I continued to buy in a little bit lower at $245, and I put another bid in at $242 a share, so that way I can continue to get the same stocks, even stock average down even lower. And if it doesn't go all the way back up to the original $246.20, it's not that big a deal. I'll make small day trades for say, maybe if I buy at $244, I can turn around and sell at $245, and I might make a couple $100, and I don't have a 0 day. And if it goes back up, that's even better. I've got my average position even lower, so it went from $246.20 down to, say, $245.50. So the break-even price is even even lower, and I make even more profit. But the main thing is not to have any 0 days, and just keep your money invested and taking profits as you go. Let's see, last week I made over $12,000 day trading Coinbase, and also Eli Lilly and GameStop. I also bought some call options the last time Coinbase dropped, and I made a little over $400. I bought in at I think right at $245, and when Coinbase is at $245, the call options are $14, and I turned around and sold it next morning for a $400 profit. Options are a lot more profitable, but you have to be very careful. You don't want to lose big. So it's always best to be very conservative and make sure you're going to win when using options. You have to know what you're doing. So I personally that's a more advanced technique, just for the more profitable investors or day traders understand that's a very risky gamble, and something that's not for beginners. But on the other side, it's something everyone should learn. But as far as dollar cost averaging goes, getting back to the subject of the video, it's Benjamin Graham's #1 way of beating the market is putting the same amount of money in every month consistently, and not trying to time the market. So whether you believe in timing the market or not, because personally you can buy the dips. I use technical analysis, so I actually disagree with Mr. Graham on that, but the main thing is to get invested in NVDA or Eli Lilly, basically any large growth stock is an excellent long-term investment. Another thing that helps, if you look at long-term charts, over a 7-year period, if you bought in at the worst day, at its all-time highs, you will still make money after 7 years, and that's with an index fund. So that's just the average gain. When you actually take your time and do your due diligence and research like you're supposed to, you can very easily determine NVIDIA is the best tech company in the market, Eli Lilly's the best pharmaceutical, and Apple's got a moat. It's basically the top 8 companies in the world have moats and are very easily the big winners this year, as well as any other years when we have a bull market. Also, if you just looking through it, how much these companies have gained. The company I'm in, Coinbase, is up 366% year to date, or excuse me, in the past year alone. Then when you have NVIDIA, which is it's up 221%. Eli Lilly, which is up 98%. And Apple's not really done as well as the rest, but it's still up 16.5%. The other main advantage to dollar cost averaging, even if a stock is going down, say your stock starts to slide, say it's sitting at $300 a share and it falls all the way to $275. You consistently buy in every single week, no matter if it's NVIDIA or Coinbase, whatever it is, eventually, your average stock price will continue to fall. Say if you started at 300, it'd be at, say, 280, and then when Coinbase or NVIDIA goes back up to, say, 280, by that time, you've already lowered your price where you're even, and you're going to make twice as much money when it goes back up to 300. And banks just can't compete with stocks. Neither can real estate or gold. It's basically just taking your time and figuring out which company you're most comfortable investing your money with. As always, you got to look at the current PE as well as the forward PE. So I recommend The Intelligent Investor. Read the entire book, and it will definitely pay off big time. You can get more than you can out of a college education. Next week, probably be talking about dividend investing a little bit. I'm trying to get my channel monetized, so please hit the like and follow button. I'm also on Twitter, Instagram, and TikTok. I have a TikTok live at 8 a.m. Eastern every morning, Monday through Friday. Also, there's a free Webull stock in the comments below. when you click on it, it'll give you a free stock. All you have to do is link your bank account to it, to Webull, and you're ready to start trading. Webull is the only company that you can trade stocks between 4 a.m. and 7 a.m. Eastern. And it's the one that I personally use, and I wouldn't, switch to another brokerage for anything. As a lot of you know, I'm doing the Webull challenge at the moment. We're currently up, let's see, $86,868 all time. And up over $65,000 in the past month alone. If you have any, stock-related questions, please leave them in the comments below. I'll be more than happy to answer. I hope everyone has a very profitable week. I will make another video next week.